Yo guys, what's going on? Welcome back to another weekly forecast video. Before we get started, obviously want to shout out my Telegram channel. I have a free Telegram channel where I share some analysis on what I think is going to happen in the market if the market changes midweek. Link is in the description, and I also have a VIP channel where I am trading alongside other traders and sharing my strategy, helping them, mentoring them, and all the good stuff as well. So yeah, be sure to check them out. Links are all in the description. Anyway, let's get started with the weekly forecast. So previous week, I did want to see some sort of accumulation, but it looks like the market just wanted to go. Obviously, with the release, the news release of the FOMC as well, didn't really help US market with them confirming that the US are now in recession or going into recession, I guess, in the upcoming months. But yeah, with this whole crazy move that we had from 1781, price pushed up to 1740, I did want to see some sort of downside, but we didn't get that. This is why it's key to keep an eye on the market and not take whatever happens in the forecast as gospel, as they say, because price obviously came back down to the 1715 area and then started to consolidate. And once I seen this consolidation here, I even shared on the free channel saying that I'm taking a sell position from around 1724 just to target these lows. Why? Because we have equal lows going on around here, which haven't been broken. And you can see that if we zoom in here, we have these wicks coming into these areas, but price fails to break below these two especially. And then what happened? Price went and attacked this low, took the liquidity from all of these, tapped into obviously a supply area, and then since then price basically pushed up, and then we had FOMC, which helped the push up. The reason why FOMC didn't want to push back down is because the liquidity below has already been collected. So when the news release came out, we had a little dance around this area. Price pushed above the 1740 high here. This is where I took a little sell, right? But because I did expect that, we might take the high here and it would be worth to have the stop loss above the previous high on the left here, which is around about 40, 50 pip SL, right? And then when price tagged 1740, what did it do? It dropped around about 50, 60 pips already. So there's your one-to-one. We took our profit because it was a little late in the day as well. I think I took all of it. I took all the profit. Actually, no, I held 10% of the trade just in case we wanted to sort of, fall down, but we didn't. So that ended up hitting our break even. And this is where you have to like sort of take little chunks here and there. And this is why taking profits are very key. It's the same way, you take your money off the table. Now, I've seen a lot of people hold their trades in drawdown for very long. There's many people who message me saying that, yo, waste man, is gold going to be falling back to around about 1720s? I'm holding a sell there, but price is now freaking flying around 1750s. How you holding the trade, man? This is where I never hold a trade longer than 60 pips in drawdown. Never. It's just there's no need, because if it's 60 pips in drawdown, you're going to be stressing, your day's going to be ruined, your life's going to be ruined, and you don't know when to get out. And when you get out, that's when it starts reversing, and then you're going to be upset for the rest of the week. So this is why you have to like sort of just say that, okay, I'm going to get out at 50 pips if it hits SL, get out, reset, let's go again. And I was telling VIP that when 1740 gets hit, I was looking for some sort of downside move, but because we never got that, right, and we continue getting some bullish impulse, which is crazy, we have to sort of adapt, and that's where we dropped on the 30 minute. There was a buy position around about here following the strategy. Again, I had it marked. It didn't call it, unfortunately, but by the looks of things, yeah, I think at the start of the week we may get a bullish move up just to clear these highs here. 1770s is where I'm looking that gold may slow down. I am looking for some sort of consolidation, right? So looking into next week, let's just quickly get into it. I think, in my opinion, that we might have some sort of Elliott wave sort of forming here. We have the first impulse here, which was rocking around about 580 pips. Then we had a consolidation phase for around about 5 days, which I'll mark with this box, which is from here to here. It's around about a 200 pip range of consolidation. And then we had another breakout, which I think is almost, if I mark from here to there, that's around about 580, 590 pips. And then from here to here, we're around about 530 at the moment. So we could push a little higher. push into around about 580, 590. And yeah, this level on the left here, you can see that we're slowly slowing down in here. I don't think it might play too much significance right there. So we need to wait and see for confirmation, because it'd be crazy just to sell here. You know, you may have caught some profit, but again, price is still very bullish. So what I'll be expecting is for price to just push a little higher, push into the 70s. We might even push above this box here, this purple box. We might push into close to 1780s at least, right? Before we could get some sort of bearish move, right? And I'm expecting for price to at least make some sort of correction or some consolidation before we have another impulse move up. Okay, so we could even come back down just to fill some of these orders that we had from the FOMC. We could even pop into this FOMC area around about 1730s, and then we could start making our way back up towards the upside. And it would look something like this. So if I get the FOMC, not the FOMC, if I get the Elliott wave pattern, you see we have the first impulse there, we have a consolidation, then we have another impulse, and then we have another sort of consolidation, which lasts usually the same amount of time. Okay, so this lasts around about five days with a range of 200 pips. You know that, okay, the move won't happen after, like, say 5-6 days. It's pretty much the same, unless you see, you know, some bullish candles forming earlier, then you know that we're going for some breakout. So yeah, it's a sort of consolidation here with another impulse of, let's see where 500 pips lands, and then we'll see if that sort of makes sense. From there to there, around about 600, 580 would be a little lower. Yeah, I guess 1800. Let's just round it up. Okay, so we got 1800 there. This could be from 1680 to 1800, right? If we look on the left here, we have a big chunk of imbalance from around about 1800, which still hasn't been filled. This was also a breakout of this level at 1787, right? Which is a support, as you can see, pop and then pop again, and then we broke through. Could this be a retest for us to sort of then calm down a little to then fall back down? We don't know. This is something to keep in mind because it could come in handy. Okay, so that's what I'll be looking for the next 2 weeks. Again, bullish order flow is definitely intact. Please favor buys if price is obviously pushing down. Look to buy, because you know the probability you will go into profit. You know, even if it's not a lot, you'll still be better off buying gold than selling it. But I'm not saying buy now. Okay, please, no one buy up here, just in case the freaking thing crashes, and then you'll be messaging me, yo, oh man, I freaking followed your forecast and you told me to buy at 1768, and now freaking gold's at 1730s, like, you know. So yeah, just wait for price to come back into these areas. You know, you have just look for these support areas. If I go into the hour time frame, right, support and resistance is key. You know, it definitely works from time to time. You got to watch out, because sometimes support gets broken. So where do we have support? If we move this line across, right, and have a look here, 1740s was a solid support level for a while until we broke out, retested, and started pushing up. This could be an area which price could fall back to following this sort of consolidation phase to then make another push up. So around here, you could get some decent buys. So if price starts to push down, that's when you want to look to buy. Don't just start buying if price is pushing up, because it could be a fake out and price could trap you in. So that's pretty much it. Yeah, I'm just going to be looking for this. I was looking for some sort of 1690s buy, right? You know, buy around about here, but price doesn't want to come here yet. Who knows? We might come here later. Okay, so don't just give up on that plan. Let's just keep following what technicals are showing us, right? Bullish order flow is intact. So let's see what we get in. If we get a consolidation phase, you know, who knows, price may want to straight fly towards 1800s and then fall down. You know, we could continue. So let's just see what next week brings. What I'll do is on the free channel, I'll keep you guys updated, because this is something that doesn't happen very often. You know, we don't get strong bullish moves, as you can see for this past, you know, since March, we've just been falling. Okay, so this is something that doesn't happen that often. So I'll be sure to like look at something like this. You can see we had something like this again. Yeah, 1680s we tapped. Okay, and the price basically pushed up. Let's have a quick check on how many pips this did before a sort of consolidation. It's on the 4 hour, isn't it? Okay, we did have a consolidation push up. Is it a smaller time frame Elliott wave? Could be. 1 second. Yeah, okay, I'm gonna have to drop down the hour time frame. 1 second, guys. Just gonna see if I can find this here, because this could be interesting if we can get it. Okay, it could be something like this. Yeah, okay, yeah. So what we had is we had an impulse phase from here to say there, 600 pips. Okay, so let's just mark this zone with an arrow so you guys can see. So 1680 got tapped, and then price went up to the first point where it started to consolidate. Okay, this then had a consolidation phase from here to there, right? And that was before price started to basically make another impulse up. And let's see how long this impulse was before the next consolidation, which is from there. So if we start from this low here, that was another 600 pips. So you can see the sort of pattern you're getting, right? You got around 650 pips there. Again, price broke out. We had another 650 before it consolidated. This time it actually did consolidate for a little longer. Okay, this could be another sort of longer reaccumulation phase for another bigger impulse move up. Okay, and then from this breakout here, which was here, what do we get? Another 600 700 pip move, guys. So you know, this is the sort of pattern we're following. If I mark it with the Elliott wave, it looks something like this: consolidation, push, consolidation. I guess we'd use a low there, and then we had a push, right? And then we have a consolidation and push, consolidation, push. And basically this sort of climbed up in steps until we got a sort of consolidation like this moving sideways. So in consolidation is usually to build up orders. Okay, so when you see gold moving sideways, you better believe that, yo, this thing's about to break out. The question is, which way will it break out? Okay, so that's what we're getting right now. We're getting this impulse move with consolidations. And if gold wants to consolidate around about 1800 and move sideways, this is our decision phase, right? Either we decide to push all the way back down, or we consolidate and keep our push going up. It all depends on fundamentals, what's going on that side, and depends on how technicals are also looking as well. Okay, so that's pretty much it. Hope you guys enjoyed this weekly forecast. Leave a like. Don't forget to subscribe. Come on, join the EEFX family. It's Elite Empire FX. Peace out.